You may have heard the words promote or carried interest when you're looking at investing in different types of assets. Today, I'm going to go over just a little bit about what exactly is carried interest or what is a promote and why does it matter. So let me share my screen real quick and give you a little bit of an information on what exactly it is. So what is a promote or carried interest? Normally, you'll hear about this mentioned mostly when you're talking about some type of a fund, an investment, whether it's in a hedge fund, private equity fund, venture capital, real estate fund. You'll hear these words thrown around: carried interest, or what's your promote, what's your profit split. And one of the most common market terms for this is 2 and 20. Okay, what does that really mean? What is 2 and 20? 2% asset management fee. So the fund manager is getting 2% to manage your money. And normally it's 2% per year, usually based on assets under management, AUM, or potentially net operating income, revenue, just depends on the type of fund. And that's a fee that they get for managing the asset and trying to make the investors money. The 20 of the 2 and 20 is a 20% profits interest. This is also known as a sponsor promote, carried interest, incentive. Basically, this is a split that the sponsor or asset manager is getting as additional incentive for, basically managing the assets and increasing the value of the investment. Now, one of the biggest advantages of the promote for a sponsor or whoever's, the asset manager, is that 20% or whatever the number is, profits interest is money that they get from basically from managing the money and increasing the value, and it's taxed differently. So their 2% asset management fee is going to get taxed as ordinary income. So whatever their rate is could be up to over 40% based on ordinary income rates. 20% profits interest, there's an Internal Revenue Code section 1061 and some rules around it that were basically finalized in 2021 that allow the asset manager or sponsor to take that profits interest and get long-term capital gains treatment of that money that's coming in, basically the appreciation that they're getting. Some of the requirements are that you have to hold it for 3 years to get the long-term capital gains treatment. So normally ordinary income is up to 1 year. Anything over 1 year would potentially be short-term capital gain, which is normally taxed as ordinary income. However, if you hold it 3 years or longer, you get long-term capital gains treatment, which, depending on how the taxes shake out that year, could be around 15% versus upwards of 40%. So it's a huge advantage to the sponsor to get that profits interest treatment, carried interest treatment. And it's only can be used for basically an entity that raises or returns capital and uses it to invest or develop assets. So this is why it primarily applies to funds. So hedge funds, real estate funds, they're taking in money, investing it, returning it to investors after investing money or developing assets. So here's a sample of sort of a typical structure for a fund. So on the top, this would be a real estate fund. On the top here, on the top, you've got basically some assets. So these are the different properties that would be held by the real estate fund, maybe owned by special purpose vehicles. And then the fund itself, and then the split of profits that come into the fund might be split up, as an example, 80-20. So this would be your typical 2 and 20 example, where 20% of the profits when they sell these assets would go to the sponsor down here. So that 20% would be the carried interest or promote, the split that the sponsor is getting for putting the whole deal together and sort of based on performance, because if it sells much higher, they get a 20% return on that sale, and that's their profits interest. And as long as they've held that for over 3 years, they get long-term capital gains treatment. So this is why it's very advantageous to use that. There's discussions about eliminating this specific tax provision, but it is still there for now. So right now there's a 3-year hold period, but it can be very advantageous to independent sponsors or anyone putting deals together. So that's a little bit about what a promote or carried interest is. If you have any questions, feel free to contact me, and thank you for watching.